My name is Gordon Jones. I'm a co-founder of the South Carolina Emerging Tech Association. I teach blockchain and information sciences and blockchain and data privacy and identity at the University of South Carolina as an adjunct. And I also have a startup called Thrivacy where we're building a digital wallet specifically for identity management. This morning we're going to be talking about identity, real estate, and tokenization of assets, which is a great segue off of what the treasurer was talking about just a few minutes ago. And it'll be an added question that I put in there this morning. So first of all, I just want to introduce everybody. So again, Gordon Jones, my name. So we got John Dean Markunas. We have Greg Ness. We have Michael Hiles. And we have Eric Lapin. And I'll describe who they are when I ask them specific questions, okay? So you'll know what they're, a little bit about their background. We're not going to get into deep bios, though. So first, I want to kind of just lay the land. Let's see if this advances. There we go. All right. So I don't know if you guys, well, most everybody in here is old enough to know what this is. Lucy Show. So they're supposed to be wrapping these candies, right? And they start out real slow, and then they get going real fast. I equate this to the data that we're generating about ourselves that people, call them the surveillance kings, are taking advantage of. And the treasurer alluded to a little bit to this at the end of his speech in regards to how we're all creating so much data that there's no way we can even handle it, much less the big guys who are aggregating all this data into big honeypots that they sell. That's how they make their money, but then they also get hacked, and others then decide what they want to do with our data. So what we're going to do is talk a little bit about property and rights together. So the first thing is in the early days of humanity, there were no property rights. There was no privacy because we lived as tribes and there was very few people, so everybody knew what everybody was doing. And it wasn't until the evolution of cities, and not just little towns, but cities, to where people could actually start building what we call walled gardens and create some semblance of privacy and keep secrets, okay? And so today, we've got the internet community. And the internet community is made up of about 5 billion people around the world. We are all digital, and all of our information is exposed that has any connectivity to that internet. And so that's one of the biggest concerns that I have personally, and why I'm focused on identity and privacy in this blockchain and metaverse world. So what we're going to talk a little bit about today is property and how that relates. So both within the physical world and then also within what we call the metaverse. And this is a semblance of a digital house being built in the metaverse. And we'll talk a little bit about some of those things. So first, I want to ask John. So John's the principal of a group consultancy called Power of Chain, which is a real estate, blockchain, technology advisory, and business development consultancy company tokenizing assets, NFTs, and in the metaverse. So the question I want to ask you is, so it's interesting that you recently wrote an article about Web3, and not to promote it, but instead to, so your focus was on how we need to get people to understand what we're doing and how it benefits them. And you were talking about how we don't need to promote all this stuff. What we really need to do is educate people. So could you elaborate a little bit more on that and kind of how you do that in your practice, or what your perspective is on that?
Yeah, I think we're still in the stage where we're reaching out to the public to educate and articulate what blockchain is, basically. And what gets more confusing now, we're talking about NFTs besides the blockchain. Blockchain in real estate, now we're talking about blockchain, real estate and NFTs, NFT clubs, NFT marketplaces, and now we're talking about Web3 and the metaverse. So I think we're kind of getting ahead of ourselves. Right now, what I do as a consultant is provide education and awareness for startups. I work with startups who are on the tech side, and I join them or unite them with the real estate side, which is the real estate industry, real estate developers, brokers, and so forth. And I was just curious, is how many people here are actually working in the real estate industry right now, or part of it? So we have a couple. Okay. Now the thing about this whole thing with education is that we're not doing enough of it, and this is the reason we have these conferences, and we're not doing it well enough. I don't think we as an industry articulate everything that's going on properly. There's a lot of BS, there's a lot of hype, and sometimes I feel like I'm part of it. So I think conferences like this, we need to distill it down, right, to the basics and make it simple to understand. One of the things about real estate, and I'll finish with this note, Gordon, is that the global real estate industry is about $3.8 trillion. Now, a lot of what I do now is tokenization. I advise on tokenization of real estate assets. But if you imagine that, $3.8 million. Now, this is why there's so many tokenization companies popping up, startups. They're salivating. They are absolutely salivating to grab a chunk of that $3.8 million by fractionalizing and tokenizing real estate. But there's a big problem. The problem is this. There's a study that was done by a research consultant advisory firm. They found out that while 80% of the people around the world think real estate is a good investment, now, this is interesting. I don't know if you've heard this, Gordon. Only 3% of the world's population invests in real estate. So if you translate that to the tokenization side, how are you going to get this 3% up? And there's two other issues here, and I'll leave it with this. There's actually a second component of this study. If 5% of these trillions of dollars gets tokenized over the next 5 years, we're going to have about $1.9 trillion worth of assets tokenized within the next 5 years. This is why there's so many companies that are popping up, and that you're probably hearing about too, fractionalization, tokenization. So it's a huge deal.
So this is kind of along the same lines of helping those that we consider the unbanked get banked, right? And one of the reasons why people in Africa who can't be banked is because they don't have property rights there. And property leads to identity that then a bank could say, okay, I trust that this is who you are, and now I'll loan the money to you so you can buy this property. And that is one of the issues. So as we move into tokenization, we see that's liberating and creating that freedom that we were talking about earlier. So I appreciate that. So next is Greg. So Greg's an attorney and entrepreneur. His interests are in solar energy and real estate and Web3 tech. So Greg, you recently wrote a post on NFTs, and in it you said that they are 1% good art, which I can argue with, 9% long-term community, and then 90% a problem-solving product. So what I'd like you to do is kind of elaborate on that in relation to what we're talking about.
Yeah, absolutely. So I got in the blockchain space going on about 2 years ago, so I guess I'm kind of a semi-vet at this point. And like everybody else that sort of discovers NFT technology and Web3 generally, you kind of go into it thinking, hey, these are beautiful images. I'm going to put them on OpenSea, and there's going to be just a massive audience that's going to gobble them up for 5 ETH a piece. But I quickly realized, those markets are heavily crowded. There's just a lot of kind of hype, bad projects, not much use for them. And you can kind of see with, Bored Ape trading trends and doodles right now, there's not a lot of volume going on currently. So what you've seen over the last, I would say, especially over the last 6 months, is kind of a gravitation away from, just these kind of indicative art pieces towards kind of more, thoughtful project development teams that actually have product managers on staff that really are trying to solve for a use case via the different data attributes that you can embed within your NFT, either on-chain or off-chain. And quite a bit of almost consolidation in that project development marketplace. And you're seeing groups that, have funding or have a pretty good use case going out and doing collaborations with sort of ancillary platforms that can kind of bolster what they're trying to solve for. So for a good example, there's a group called, probably some of you guys are familiar with it, fireblocks.io. So if you've got a project that potentially has a customer base that's more institutional in nature, rest assured they're going to have a lot of potential concerns about security, whether that's with their private keys or with some of their commercial data governance information. So you have to kind of figure out how to either solve that yourself internally or reach out to groups like Fireblocks and kind of add them as kind of a tether to your project. And Fireblocks, look them up. They're fantastic. They've kind of evolved from kind of the standard multi-sig wallet security platform to several different layers, including your policy engines, really working with institutional investors to kind of give them more guidance and help on establishing criteria.
Yeah, cool. So so does everybody in the room understand what an NFT is? Is there anybody that? So that's good. So yeah, this is Charleston, right? So there's not a lot of people in Charleston that know what all this stuff is. So we have to make sure that those who are coming here to learn understand, right? Well, that's the point, is teaching. So Michael, so you're the founder and CEO of 10XT. Yes. Okay. I didn't catch that. And you work deeply in this space of fintech, and I mean real deep. You were telling me what you guys are doing, and they're like in the background of the background, what they do to make sure that all this stuff is compliant. But I'm gonna put a little twist on this because we are talking a little bit about Web3 and Metaverse. So you wrote a critical review of Amazon Prime's Rings of Power. Okay, so Rings of Power is a Lord of Rings movie that just came out, where you said that you had to change your mindset of what Tolkien was creating in order to understand what they were doing with this new movie. Okay, so my question is as we start educating people on what this metaverse is, because my wife does not get it, do we need to change humanity's mindset to figure out what all this stuff is in order to ultimately turn it into a daily, it doesn't make any big deal type of use?
I'm going to go contrarian on this one. No, I do not believe that the average person cares what the plumbing is underneath the screen. They just want to see the numbers. And so it's pioneering tech folks that really get enamored with the technology. In the end, it's just plumbing.
Yep.
And I use a colorful phrase a lot of times when we talk about market infrastructure and plumbing, that when you flush the toilet, you don't care necessarily where something goes. You just want it to go there. You only care if it doesn't go there, and then you call a plumber, right? So we're plumbers, and ensuring that that market infrastructure exists to make good on the promises of increase in liquidity, increase in democratization and fractionalization of ownership of assets that are otherwise outside of the reach of the average investor. And that's the interesting thing about real estate is it's an all or nothing proposition. You either buy the whole property or you don't. Or maybe if you're high net worth, you buy into a limited partnership and you fractionally own that property, but it's still a very high ticket to entry to buy an LP interest in a special purpose vehicle that owns that property. To date, to allow for the average person to participate in a very expensive commercial real estate investment, the technology is not such that would allow hundreds of thousands of people to take a fractional interest in ownership unless, say, that property was in a real estate investment trust and publicly traded on the stock exchange, for example. And that's effectively what we're talking about doing, is moving how things are done today underneath the hood into a future where a change of technology underneath the hood is going to open up the opportunity for broader distribution, more retail accessibility of those real estate assets and investments. But in the end, it's just plumbing, right? It's not exciting. It's exciting to technologists and people that are enamored with it, but I went through the early years of the internet, right? I got a little gray hair, and if you remember, in the early days of the internet, everyone was enamored with email, and the internet's this amazing thing that's going to change the world, and it did. But today, 20, 30 years later, we don't even think about the internet. It's not even, it's just there. It's part of the common culture. It's the common taxonomy that we use. I look it up on my phone. Well, what are all the Keebler elves down in the stump baking the cookies that makes things happen natively? And we'll, in 10 years, care no more about blockchain and tokens than we care about TCP/IP and network protocols that makes my mobile phone look up my Uber driver.
Yeah, yeah, and that's why I teach in the College of Information and Communications, which is, I call them the content creators, the School of Journalism, Digital Media, Library and Sciences. So they create information and they manage the information, but they don't program, right? So I teach what I call functional blockchain. So I just teach them what they can do with this stuff, and then they work to solve problems that they have based on the function of this technology. So yeah, I appreciate that. I was trying to explain that, or I was explaining it to my wife yesterday morning as we were on our walk, is that, hey, so we got this 13-year-old son of ours that gets on a computer and goes and plays video games and all that today. So what he'll ultimately be able to do is go to a virtual Nike store, try on his favorite shoes that he wants, and then he'll either be able to buy a version of it for his avatar, or he'll actually be able to ship a physical version of those shoes to the house. And then he just bought it's like going to Amazon, but it's 3D and it's immersive instead of just going to this flat Web 2 thing, right? So Eric. So Eric's Chief Strategy Officer for Form Free and a frequent speaker in capital markets and innovation. So Chris, you were interviewed by David Lapin, or Lycan? How do you pronounce his name? Lycan? His name's David, sorry.
Right,
Yeah. So this month on democratizing consumer data. So how do you see consumer digital identity and the permission financial data that lenders need? So how do you see that coming about in this world in regards to how we may be able to change the way people are getting loans for both the physical world, but then even possibly being able to get a mortgage for buying a piece of property in Decentraland, for example?
Good question. So again, name's Eric Lapin. To answer the way that I could best explain this is today what we do is my background's 25 years in mortgage banking, securitization, capital markets, and title insurance, and work with a company called Form Free that we've done over $4 trillion in loan validations and verifications since 2008. Income, asset, employment, digital identification, and ability to pay analytics. So as we're dealing with democratization of data that Gordon was talking about earlier, you're starting to see the use of data go into control of the consumer. The consumers controlling their own data. And everything that we've done over the last decade with the 3,300 lenders, financial institutions that we've worked with, we are now tokenizing that. We're calling that tokenization of human financial DNA. So you as a consumer control your data. Open banking, open finance is what it is. It's kind of like a Mint or a personal capital, Credit Karma type of thing. You allow access to your bank statements. And out of those bank statements, you can gather information about someone's ability to pay. So it's called virtual credit. So virtual credit now is, at any time, I control my token without my PII. So my personal identifying information is not shared with any lender until I decide to share that token. When that token is shared, the lender can make a decision on the ability to pay, whether it's a home, for real estate deal, consumer, crypto, student loan, buy now, pay later. There's all sorts of financing that goes on right now in the United States, but the stat that we just saw over there, 300,000 people underbanked in South Carolina, there's 42 million in the United States. So 42 million people are underbanked in the United States, mainly because we work off of an antiquated 3-score system, which is called FICO. And FICO says you have to be in debt to get more debt. And And the way that loans are decided is gross income. And we say gross income is gross. I mean, it doesn't show the ability to pay at all. So our analytics basically look at the consumer's permissioned asset statements to say, what's the income coming in, what's the cash flow analysis, what's the discretionary income, and there's a residual income knowledge index score on there that says, are you trending up or trending down to afford this loan real time based on your permission data? So there's no credit inquiries, there's no triggering on those credit inquiries. It's an issue with the attorney state generals in many states now. If you've noticed, Equifax, Experian, all those companies are under fire. We're providing alternative credit. So democratization of data is real. If you notice what's happened to Facebook or Meta, they went into Web3 because they can't control the data anymore of a consumer without getting in trouble. It's very costly. So democratization of data really is Web 2, Web 3, as we get into the control of how it's being used, where it's being sent. We don't sell it, we just tokenize it, and as soon as it's tokenized and sent, then decisions can be made. So it's something that's cool. I mean, we do it today. Lenders utilize these tokens, and when they're utilizing the tokens, they make decisions on there, and our eventual goal by 2024 is to have an exchange where we have many people utilizing our app called Passport, where they have their tokens, and they go into an exchange where lenders bid on them based on credit profiles, not knowing anything about color, race, socioeconomic background, and it's all based on an ability to pay on a tokenization. So it's something that's very interesting, and John and I were on a panel many years ago when we first met, when I was in the title insurance business and was working on blockchain for the title side of it, and realized pretty quickly back in 2018 that you can have lien releases and assignments and recorded information and e-notes and everything like that as a node on a blockchain, but you've got 3,300 counties around the country that are all in sync, and we'll be dead before all that comes into sync. So purpose being, put the control in the consumer, not in any other areas, and that's kind of the thought process behind all this.
Great, great. So, yeah, one of the things that I teach about this is in regards to data privacy. We call it the intention economy. So today's world is the attention. They're using our data to get our attention. And what we want to do is use our data intently to receive the services or products that we want, and we can share our credentials that allow them to make their decision, and in this case, a mortgage, without them even knowing who we are, right? And so that's the intention. And so 20 companies make a bid for me. I choose which one I want to do business with, and then they're the ones who actually get my personal information so that we can do business together. That's great. And I'm going to get to a scenario here that I want us to talk about that kind of relates to what the treasurer was talking about. Let's see if it'll transfer here. So, 1 minute to the end. They went over last time. Anyway, we'll figure it out. So here in South Carolina started out as a province with 8 grantors from the King Charles. In 1729, it turned into, that other slide was South Carolina, North Carolina split. So there were disputes about property then. Then at the Revolutionary War, the Loyalists went back home and the Patriots got to keep their property. So now who owns that property? After the Civil War, this is really where we are in South Carolina. And this clicker's just not working. So after the Civil War, plantations and other properties were split up and given to former slaves. And they were given to them in the form and as families and groups of people. So they were not ever really titled to that property as an individual who said, okay, I own this piece of land. And today we call that heirs property. And it's still very difficult for them, the family, to sell it because people can't get a true title on it. It's really hard to do that. When some ancestor or a descendant of an ancestor who may have had a claim on it can still claim on it, right? So we might not be able to solve this problem, but how do you see this problem going away in regards to what we're building today? Anybody have a response to that?
I can jump in here real quick on that. Immutability of the record is what's missing, right? It's all anecdotal. My grandfather owned this land and was given it, given it from way back when, right? And provability of recordation is really the highest and best form of use case of blockchain in general, right? It's the provability of the transaction and the record. Tying those identities to the real world asset and the real world ownership is really the key and where the rubber meets the road. Once that data is on a chain, right, it's persistent and immutable, but getting the data to and provability, getting the audit and provability of the data out of the chain, I think is the next step. That's kind of the next generation.
Anybody else?
Yeah, blockchain is not going to solve this problem.
Okay.
Nope. First of all, you have to have records that are true and legal before you can, and the digitized records. So blockchain is not going to solve this problem nor a lot of problems in the world. But it'll help once these records are clean and are ready to be uploaded forever on-chain, immutable, etc.
Yeah, because the example I use is in Cuba when Fidel Castro took over and kicked all the upper class out and took their property from them. He burned the records, right? So they can't go back and look at the records to prove that they owned the property. They might have something that they brought with them. But yeah, there's really not a whole lot we can do about history, right? But what can we do now to set everything up, which I think is what the Treasurer's doing. I mean, with all the money of unclaimed assets that he's knocking on doors to try to give away or give back, I mean, it's crazy. And if all that was digitized in this format, we should be able to solve that as a problem. One more statement?
Yeah, you are seeing banks today do loans today go forward on blockchain because they can prove the validity of the data. It's just like an NFT for real estate. The NFT is only good as long as that title is correct inside of there. But like you said, I mean, the immutability, the validity, and the auditability of it makes it a lot quicker because you have custodians on the back end that spend a lot of time and money. The cost to manufacture a mortgage loan in the United States is $8,300 to $10,500. Depends on the size of the lender. Half of that is fulfillment of the loan, which is underwriting processing, and sales, the loan officer compensation. If you can remove that because you don't have to do due diligence 5 and 6 times at $700 a pop, things like that's where blockchain comes in to help and make it better, but the data has to be true.
Yeah, so I would say one thing to take away from this when you go back to your county is go visit your county clerk's office and educate them on blockchain technology because they all think it's poo-poo, right? They're not going to, they barely even convert your title and your deed into a digital record, much less something that's immutable and can never be deleted, right? So even if it's in a central database, Fidel could still come in and burn that central database and delete all those records, right? Where if it's in a blockchain structure, now it's basically undeletable, right? So I appreciate everybody being here today.
Thanks,
we'll
Gordon.
let the next one come in here, and you can ask them questions one-on-one when we break up. Thank you, guys.
Thank you.
Appreciate it.
Thank you.